So we heard a lot this morning about the fact that we are not seeing today, there we go, we're moving ahead quickly. We're seeing a period of change, and I know you all sincerely believe that you understand we're in a period of change. What I'd like to tell you is we're in a period of change which only happens every 100 or more years. Jeremy Rifkin, the economist, has coined a term, the third industrial revolution, again, referred to earlier on today. And what that really says is every 100 or 150 years, you see a confluence of technologies that fundamentally change everything. The first industrial revolution was around steam, coal, railways, the second around electricity. In 1750, Benjamin Franklin flew a kite. It took till around 1920 before all of the standards, the availability of transmission, AC transmissions, et cetera, to come together. But between 1920 and 28, the Western world went from 5% usage of electricity in homes to 80%. And every factory was transformed, every industry was transformed. That's the kind of change we're in today, only it's being driven by the internet. It's being driven by ubiquitous communications, and that kind of transformation does change everything. And we're in the middle of this, and it's not going to be decades for it to affect all of your businesses. It is the opportunity that it's going to enable many of us, but it's also going to be the risk to many of the large players today. Now, one of the things we've seen is the unstoppable rise of the shared economy. I could have stayed in an Airbnb residence last night, had dinner at Feastly. I could have asked for some assistance from Odesk to give me some research backgrounds. I could have raised money for the trip on Lending Club. And all of that would have been a really strange way to do all of that in one day. But the reality is this is not something that is on the fringe. This has become very big very quickly. And a couple of examples of that. Raise your hand if you have a car. Now, raise your hand if you're currently driving it. The point is, a fully utilized car will be about $270,000 worth of revenue to the car industry, and today, none of us are fully utilizing our cars. So I don't know of a single car company, and I speak to all of them, I don't know of a single car company that thinks they're going to be a car company in 15 years. Well, they'll be involved in cars in some way or another, but will they be a brand? Will they be a service platform? They are all thinking differently about that. Airbnb today is valued at $20 billion. Uber is at $40. And as we talk to companies about how they use technology, as we engage people on sharing best practice on the ways of it, we see that this transformation is occurring everywhere. And it's really about customers sharing, wanting to snack on a service rather than embed. And now you put that in a financial context. And you put that in a context where I have my bank account, I have my banker. That doesn't really sit well with this world of I need to do something. I have a desire to lend money. I have a desire to transfer money. And I will choose that in a different way. Now, this transformation isn't only occurring in the kind of services we offer, it's also critically important in the whole area of how a company works. Today, only 7% of the Gen Y work in Fortune 500. And here's a secret that every Fortune 500 company will tell you: they don't like working there. They hate it. You know, when graduating staff of Stanford comes out, 50% of them are turning down jobs of over $1 million in many cases to work for startups because they don't like the environment. What is happening here is a fundamental change in how people want to work together. And we've done a lot of studies. 40% of the companies who are in the Fortune 500 in the year 2000 weren't there in 2010. Just this week, Apple replaced AT&T in the Dow. Those kind of transformations are occurring by some very consistent reasons. And the studies show it's innovation, velocity, and openness. They have to re-examine how we have to work. We need to encourage people to collaborate. We need to be able to be more effective. And I'm not going to go into more detail on this, but it's a massive transformation required and a big challenge that will demand that large financial institutions embrace fintech and embrace the smaller companies who can bring that ethos and that approach if they're going to be successful. All of this is being driven by Moore's Law. We have reduced the cost of computing by over 60,000 times in the last 40 years. 60,000 times. And as part of that, it's unleashed several forces. One, social, the ability to asynchronously communicate in the way you want, when you want to do it. Mobile, to do that wherever you want, on a powerful platform that allows me to communicate at all times. Analytics that allow me to know my customer, to know my services and be able to communicate through to them. And finally, the cloud that makes that possible, the ability to have a fabric of compute that I can land composable workloads on, not silos that require me 3 years to write an application and then roll it out with great fanfare, but something that says, I've got a great idea, 3 weeks from now I'm going to roll that out. History shows that SMAC is disrupting these traditional vendors. And you can see here, we have the traditional vendors in the IT sphere, and we have the new ones. Now, when we look at what's happened to them in the last several years, now remember, most of these didn't exist in 2005, we see that they are almost at the same annual revenue. In fact, it's actually, I think now, the value of the new vendors is greater than of the historical, because you look at people like Alibaba having gone public, and several here are still private. So this is real. This is very big changes that are occurring. And the conversation I have with financial institutions globally is one that really sets down with some very great concerns. My people don't get it. I don't understand how to do this. My structure and my applications and my knowledge are all set in silos. How am I going to live in this new world? How am I going to meet the needs of my customer in a sufficiently rapid fashion? Well, that SMAC stack, as they call it, social, mobile, analytic, cloud, that SMAC stack is actually causing a transformation within the banking environment. From having the branch at the center, and then I can have an ATM for those who can't make it to the branch, I can deal with mobile for those people who want to, I can go online, etc. It really moves to a change where I have digital at the center. And the digital platform that allows me to know my customer across all aspects of how they do business with me, the digital platform that now allows me to serve them in an agile fashion in the way they want to be served, is really having to transform that bank. And so the branch, the ATM, the call center surround that digital platform. Two recent examples here. Just this last week, BBVA's chairman said, think of us not as a bank, but as a software company. 3% of their workers are involved in the digital platform today. 5 years from now, it will be more than 50% of the BBVA workforce. Now, that is a transformation. Wells Fargo has gone through the same transformation. They, on average, sell their customers 6 financial products. The industry average is 2. So it says, there's something here that works. But it's very complex. It's complex because you have regulation and compliance, right? We have new regulatory environments that are requiring that we're able to stay safe, deal with our customers, know our customers, and at the same time deliver on this innovation. We have changing customer behaviors, customers not wanting to have that monolithic, continuous relationships necessarily, but we'll look for different ways of approaching things. And we have new entrants. We see these new entrants in areas like payments, in areas like crowdfunding of funding. And in those new spaces where you see this coming out, what is really obvious is these new entrants come in with digital supply chains that are incredibly efficient, disruptively low cost in many cases. And how am I going to deal with that if I am my traditional financial institution? On top of that, my observation, regulatory compliance issues are also freezing many of those very smart people at the traditional financial institutions who are afraid to make the move because I might step over the boundaries. And so how do I balance that agility with the need to stay legal and stay safe? It's a huge issue, and I believe cannot be solved unless the people in this room on both sides work together. So what does this mean for you? And this is something that applies across all businesses and all industries, but it very much applies in the area of financial technology. There are several different imperatives that we all will need to go through. One is in that area of workplace transformation. How do I attract the millennials? Another is in the area of Internet of Things. How can I deal with an instrumented world? I won't talk more about those today, although we're happy to talk with you at another time. But three I will talk about are, first of all, cloud. You have to re-envision the data center. You cannot be successful in dealing with this new environment with silos of information that don't easily move across, that have the cost structures of the traditional data center. Cloud is absolutely a tiny fraction of the cost per transaction. And we think of cloud oftentimes in the public cloud, but the technologies behind that enable me to deliver a fabric of compute I can land a composable workload on, those technologies apply internal as well as in a hybrid or a public cloud environment. Our view on this is something called software-defined infrastructure. Again, providing that flexible compute fabric that I can land these workloads. Internal to Intel, we've reduced the time it takes to release a virtual service from 140 days to 15 minutes in the last 18 months. And that is consistent to the point where you have an idea, you work it out, once you say go, 15 minutes later it's live. And if you aren't doing that, if you're still saying, yes, we're planning a June release, and then that'll be the beta, of course, and then we'll have, you are not going to be able to meet your customers' needs. The second is analytics. As is said many times, data is your new currency. And it's used in many areas. Risk management, portfolio optimization, optimizing a 360 view of your customer to be able to serve them better, increasing operational efficiency. We're working with one bank who has just connected all of their ATMs, is managing them, and is able to optimize the filling of the ATMs according to when they really need the money as opposed to a link. They are saving a huge amount of money on a very kind of boring, something you have to do at the operational level. We're working with a group called Stack, which is developing standardized use cases of these different opportunities. So for example, looking at card fraud detection, things like that, and is benchmarking them. So you can then look and say, how am I doing? And I'd encourage you to reach out to the Stack team. They do a great job. The net result, though, is you have to start this journey and you have to go hard on this journey. The first thing you'll find out is you don't know what questions you ask. You don't know what problems you want to solve. Once you figure that out, you'll find out you don't have the skills in-house. Once you figured out you have found that you have now, I need to go hire the skills, you'll find out you don't know the tools to use, you don't know the limitations of it. This is hard, and it's absolutely required if you're going to be successful moving forward. The third area is security, and I've got a list of companies here that have had, unfortunately, their names in the press: Target, Home Depot, JP Morgan Chase. These are massive, massive breaches. The average physical bank robbery yields $6,000 to $8,000 worth of loot. The average cyber attack on a bank yields $1.3 million worth of loot. And that doesn't count the reputational damage if you actually expose your customers. And unfortunately, while the banks are a harder target than most industries, you can't work alone. You have to link to retailers. You have to link to the public. And this is an area there's huge developments on attestation, on the ability to identify and know I'm dealing with the right person and to reduce those levels of fraud, but only if you take that as a very high priority of how you can do this across all compute platforms. I'd like to close by a statement here that says, a pessimist sees the difficulty in every opportunity. An optimist sees the opportunity. And this is an amazing opportunity to reach out, to serve customers in the way they want to be served. You heard that several times today. Hey, this is the way people want to do it. We can now do that in a way we couldn't have dreamt of. The opportunity here is absolutely massive. So as we move forward, we see this pace of change accelerating. It isn't a 2-decade, 3-decade. This will happen much faster than you think. It will happen with people gritting their teeth with saying, this can't be true. Haven't they realized this stuff isn't good enough? Clayton Christensen wrote The Innovator's Dilemma. They come in and they take the services you don't want to deliver. So you say, oh, yeah, but we don't care about that service. Guess what? They get their platform up and running. It now is robust. They then say, we're going to now take the next service. So if you're not seeing that happen, you need to start looking more carefully. Technology is only part of the solution. You have to be approaching people in a different way with a different culture, and that includes investing in women and bringing up a diverse workforce that will look at issues in different ways and enabling the very best of people to come forward. These cultural implications are going to be massively important. Every major bank I know of has a board-level imperative to figure out how do we fix culture? How do we get people moving on to a more flexible, collaborative culture? So I guess my question in the end here is, how do you plan to innovate and to enable innovation? Thank you very much.